Hello everybody, welcome to this webinar. Today I'm going to talk about a practical example of hedging analysis and therefore hedging technique applied for swing trading. Just a brief introduction before starting, just in order to give some information to some emails that I'm actually receiving, and I'm also doing this webinar to complete some information that I provided in my previous webinars, and then of course it generates many requests or questions from you. And not all the time I can reply via email, and other times it's better to make a video and let yourself to decide and understand even further. Then for any other kind of deep understanding or request, you must contact me privately as usual. Of course, today I will not do any kind of robots. I will do more a seminar, so kind of explanation of things applied, so with a real example we will see, and that's the part of trading that anyway is the base of also my expert advisors and robots, even if I have always a kind of simple and very rough approach with robots, because they are very useful the moment they help you to set up your positions and therefore set up your portfolio, but they can become very dangerous if not be watched, and especially if we don't know what the robots are doing along the time through the currency pairs, and with the correlation that it's always an element that persists, especially in Forex. There are also approaches that always require a kind of expert advisor, because you always have to filter the pairs and generate the most effective for the day to trade. But in certain cases, especially when you get the right correlation, it comes that the probability of success in the trade increases significantly, and most of all you can achieve a new step in your trading, because from an intraday position you can then move and shift to a swing trading, so a position that can be held for one or more days or even a week in certain cases. It depends on the currency pairs and how the market is performing. So in order to start with this, I prepared a sequence of slides that can be very, explaining all the things that I would like to show you today. And of course, for any check on this elements, on this data, you can always refer on your Metatrader platform and go and check by yourself, because all the information that we have here are all taken from recent months events, and so you can always check by yourself. I'm just trying to make it straightforward instead of moving from chart to chart, trying to catch the right position and explain you what happens on the other side, even because it's weekend, so markets are not running today. So this is a static lesson that anyway it's quite good if you bear with me till the end, because you will see the develop through. There are only 9 slides, so it's not very much, but there's something to say, and I think there's something to gain if there is an understanding of the application, which is basically this webinar, the application of the theories that I have explained and supported in my previous videos on my channel. So let's start with this one. I run my algorithm. Let me just also activate the pen so that I can be even more practical in explaining, and so you can follow me properly. So let me do this. Okay, so I run my algorithm on it's indifferent because on every pair, that in every chart that you use it, it gives you the analysis of all the currency pairs. So I started anyway on a Euro USD chart, on a daily chart, and I can analyze the performance within the time frame that I decide. And this example is made on a daily basis, but of course we want to aim to swing trading. We want to aim to an intra-week trading. Therefore, we must see the larger picture. Okay, where also volatility and some noise is somehow better perceived. Okay, so what I wrote down here, we will come in a minute. Just to bear with me, we are on the 24th of April, and what we are looking here is the moment of that the algorithm started to work, and therefore these are the assumptions that I will explain you in a second now about the currency pairs and their setup for the day week that we should analyze by analyzing, I don't know, 30 pairs, 30 charts, and then taking out of them their correlation, their strength, their weak, put them together and make this in few minutes, not in hours, not in days. Then of course you have to monitor the position day by day, but the analysis and the filter, it's fundamental and crucial for determining your portfolio and the positions, whether they are pending orders or you decide to enter immediately. So as you see, we're analyzing 1440 minutes, so a day. And I call it like power. This is one of my first algorithms on hedging and power, strength and weakness of the currency pairs and the currencies, because here we see we don't have currency pairs, we have only currencies. Okay, and we have here values. I hope you can read it quite well. We have values that are putting the Japanese yen in this day. Okay, so if you want, you can check in your Metatrader platform the 25th, 26th of April 2017, and this will develop through the days from this point on for different currency pairs that we must create and generate our portfolio. Okay, so from the values that that my algorithm calculated here, I can establish a kind of positioning of the currency strength of each and every currency, and determine that against a euro that has 300 and these are numbers based on market performance, so they are quite relative, but of course the trick is to make a comparison together as they are expressed on the same scale. Okay, so let's say that I have a positive value of 369 on euro. So euro is good to buy, but buy against which are the currency pair that I have to consider. Therefore, currency pair that I have to then open my chart and then decide to position my trade. So we see here that with the with the dollar, it's weak, it's minus 75. I write them down here if you cannot read it well. Then I see a very good contrast with the Japanese yen, which is 293 minus. So here a simple number. Some emails that I receive is like, hey Marco, but if I have to do mentoring with you, with all the numbers, if you see my previous videos, there are some algorithms with thousands of ciphers, but it's in real, it's like, you know, things that even a child can do. It's very simple. It's just comparing quantities that are representing market performance and therefore the currency behaviors. So here we have a minus 293. Then we have the New Zealand dollar with a minus 198. And we have the CAD with a minus 147. compared to a plus 300 and more. Okay, so basically, of course, if I have to trade something that is very strong against three possible four, let's say with this euro dollar, but I don't trade euro dollar in this case, I decide to trade the most strong, the major strong with the majors weak, that are expressed by these negative values. Negative is weak, positive is strong. Okay, so for this day, for the 26th that is going to start, and of course this is the euro dollar chart, but then we will go through other charts, so that bear with me, and I thank you for your patience in following me, but this is very crucial, otherwise you cannot understand until we arrive at the end. Let's say that I generate, of course, this position, so euro yen, Japanese yen, euro New Zealand dollar, and euro CAD, sorry, with a buy position. Okay, this is quite instinctive. Okay, okay, so we have to consider and remember this this prediction. Okay, so we will start our portfolio with these pairs. So let me go on the next slide, which I hope is here. Yes. Okay, so remember euro CAD. Oh, let me also do a bit of cleaning. With this we don't need, but I leave what? My prediction that, of course, we are now analyzing on the relative euro CAD, euro New Zealand dollar, and euro Japanese yen. If we see on the 25th, and then the 26th, and then going on, as predicted from here, from this point, we got plus 200 pips. Okay, euro CAD, and you can check, of course, I always say to you about plus 200 pips, and you can also check in the next days, but the reason why I'm going through is to show you that then through the week there are other pairs that are coming out. So it's a dynamic approach. If you're static in the Forex, you will fail. If you are dynamic, you will succeed, and at the same time you will see there will be less effort because you are making everything clear. So euro CAD, let's say on the 25th we decide to enter and buy, and euro CAD, this is the performance. Okay, so it's quite a good result. Let's go further. Let's go to the next and here we have euro New Zealand dollar. I hope you can see that. We were saying euro New Zealand dollar in buy here as well. The 25th started. Okay, realizing 260 pips. So okay, well, fine, then let's move further. We were saying euro Japanese yen daily. On that day, see, there always this gap, so it's the same charts all daily, but you can anyway verify this, and we had an increment of 240 pips in a daily scale. Okay, sorry. which makes roughly a 700 pips. Okay, with just 3 pairs. And of course, with just this, so reducing the risk. But then what happens that if you see the values, you can also go back in the video. There's no need for me to go back and forth because you can always, rewind and recheck by yourself. These values are changing every day because every day the currencies are explaining a different performance against the other. They are all related and co-related one to the other. So it happens then during this first day you have to start analyze what is going on, because you need to understand your positions if are still good to keep or better to close, because something has changed drastically here, or if there are new positions that you can introduce in order to hedge and therefore reducing the overall risk of your portfolio that is going to face is going to face more days into the markets. So your money, it's more days into the markets. Okay, so let's grab the next slide. And in this next slide, so all consider that the 3 positions that we were performing were successfully entered. Okay, now let's just get rid of this, and we can then switch color so that for you it will be very clear. And we are on this day, we had our positions with our pips made, and at the same time we are keeping monitoring this panel that has informations regarding the strength of the currencies. And as I wrote here, now we are on the 26th, so the day after the 25th, and we have to understand what to do. The scenario here reveals that we have euro, I write here in big so you can keep track of that, has a positive power of 267. Okay, then another good candidate for my analysis, even if I don't like that much because I don't like the way he performs in the markets, is GBP with a plus 205. On the other hand, here are the strong and then the weakest, we are having a negative on New Zealand dollar of minus 210, and the other one is the Japanese yen, these two, with minus 342. What this means in this scenario? It means this prediction that, of course, I put in buy GBP and euro against the weakest New Zealand dollar and Japanese yen. That's it. So let's write, because then I will switch to new slides. So just to rewrite this prediction, I'm gonna write them, well, let's write them here. It's always good to have all together. So we say, let's start from this euro Japanese yen that we are already observing. So we have euro Japanese yen buy, then we have euro New Zealand dollar buy, And then we have the same, the GBP in Japanese yen in buy, and GBP with New Zealand dollar in buy. This is my new analysis, and of course I was already in buy from the previous day with some of them, which is a confirmation. Okay, if it's true, but this is probability game, you know, all of you knows about this, but we must to narrow to the best scenarios and best opportunities that can present. Okay, so by all this said, we are just in our Euro-Japanese yen situation, and we already made 240 pips with this. So bear with me with the next slide. This is the develop of the Euro-Yen that we're having in buy. Of course, here I don't need this. Let me just get rid of this stuff. Okay. Euro-Japanese yen is still in buy, and we have realized we were at, let me just pick up another color. Okay, so from our previous starting trade, we were having about plus 700 pips, right? If I don't remember wrong. And so we are now in the analysis of our trade that we can make, you know, a couple of times a day, but just to check. So we can put a check on Euro Japanese yen, it's okay, buy. And these are some days after, so this is from the intraday to swing. We have realized something about 230 pips more. Okay, so from Euro Japanese yen. Okay, now let's go and check the other positions. And this is the Euro New Zealand dollar, which is in buy, and we can see here a movement that you can also check on your charts. It's about 300 pips, and this is the movement already started on the 25th, 26th, and proceeding further. Okay, so we have other more 300 pips about. I'm going roughly, but you can always make the perfect precision, you know, measurement of that if you want. Let's check now GBP, Japanese yen. And here we have a great performance of the GBP against the yen. And we can see we have a 230 pips at the beginning, plus 330 pips more up. Okay, so we can say here, if we didn't trade maybe this one, we didn't evaluate this one, but we got this one too. So this is always good. We can add, you know, just what pure we could have just made, so 330. And finally, let's also check the GBP New Zealand dollar, which had a kind of up and down, even if starting from a good position of already 250 pips up, of about 700 pips. Okay, so we are having here the last pips. Okay, so roughly we have gained plus this one. So it's right here about and this process can go long and long forever, in the sense that every day you are analyzing, you can keep monitoring and see what changes are necessary for your strategy to then enter your portfolio, close some positions, open others. This way, anyway, you're hedging, so you're combining together really correlated pairs, really correlated currencies. And you can really, in this case, we had an outcome. Here, the probability was about something like this, if you don't mind. This is maybe one case. There are some cases where if you close too much early, maybe you have a less percentage. But anyway, we only mentioned these currency pairs and not others, based on what was the scenario computed by my formulas in the till that moment. Sometimes you can also think about that. For example, if you start this day, but if you start this day, you start to read that day. Of course, there are some, I took, if you can see here, values that are pretty strong. Wow, too much. That are pretty strong. You cannot consider values that are very narrow, because they can switch from positive to negative very easily. But when something is tangibly weak, which means weak against the majority of the currency pairs, and when something is strong in the sense of being strong against the majority of the other currency pairs, then the trick, the magic happens, because then you can really focus only on the pairs that from, I don't know, you have 30 charts, and then you are narrowing to, in this case, we have narrowed at the beginning on 3 pairs only, and then on 4, but 2 of them were already embedded, so we had 5 positions, 5 charts to monitor then. And when you made this once, of course, there are days which is better not to operate, or certain hours in days, like on the Fridays or at the beginning of the month, or when there are some critical news, not because you have to follow the news, but because they are moving. Institutions, the banks, we are on an over-the-counter market, so nothing is regulated, and we must take decisions that sometimes we would like them to be for days or more days, but only by having a partial view. The moment you have analyzed 30 charts visually, you're not making any math, you're just making a visual assumption that, of course, is math, because it's based on the proportion, and now your eyes can see the proportion. But you need to have calculations, because we have to consider that we are in an age of algorithmic trading, where a lot of operators are also operating with different kinds of diversification of the market, such as binary options and 10 seconds trading and all this stuff, that basically they are buying and selling at every price level. Very simple. It's like there is no such an opinion, a strong opinion on what it's then destined to walk in a range for some days, or then have a great spike. So the currency pairs that you have to trade, they really must have some kind of strength or weakness, trying to level the great amount of noise that is generating. Let's say you are having a background noise and you want to hear a song. You must put the volume enough louder to hear the song and cover the noise. Same thing here. By putting a high volume, high level of sound, we are just taking these high volumes that anyway, no matter what, even if there is volatility and up and downs and stuff that then makes us feeling stressed and without any capability of taking a decision, but by something that levels our perception of our analysis, we are indeed listening the market song, the Forex market song very well, and operate only with the currency pairs that for that day or more days, like I just demonstrated now, they have revealed such a nice performance that, of course, it's likely to have every time we trade. Not always is Christmas, not always is Sunday, as we say in Italy, but the majority of time is just because we are not analyzing properly the market. So there is one side where you can trade with robots, and I do apologize if I still don't have my website on. It's one of my dreams to make it, and I will do that. But it's taking more time than the necessary, because every time, especially when I publish a new video, I receive mails, some people that want to be mentored or make some courses, some of you, they want to make a customized algo with my technology or with your ideas. So for me it's fine, but it's time consuming. And of course I give priority to that. So if you are really, into this thing and you want to develop something with me, you must contact me through email first, present yourself, because I will not go further with emails that are just asking without not even say your name, because I'm here, here's my name, is my face, there's nothing wrong with this, I hope. And I really would like you to, if you have any need, to expose yourself and tell me what you need, because there's certain things that I can help. Even realizing these videos for me is like trying to make an asset for not replying to much emails and focusing myself more on the work that I'm doing, which is basically build expert advisors for Metatrader 4 and give some mentoring, because some algorithms, even the ones that are automated with robot trading, they need to be known and understood, and this takes time and effort. So priorities are handled this way, and scheduling as well. So I hope you bear with me with this too and make sense to you, but that you always have the opportunity anyway for this time until I won't have my website running, because I will have the time for doing that. Probably I will do that in summer, in vacation, when I'm on vacation. And until that moment, the only way is just to contact me directly, and maybe we can have a brief chat on Skype. And of course I will give priorities to those who have priorities and need a priority, so they manifest that and they engage me for a project, for an algo to create, or for a mentoring course. Like in this case, this is some experts also from my trader mentoring courses that I do, where I can explain something. I hope this video has helped a lot of you and makes kind of sense with the knowledge that I've shared in my previous webinars on hedging and how the Forex market works. If you like this video, of course I invite you to subscribe my channel and to write any comment if you think is necessary. And with this, I thank you for watching, and I wish you a good start of the week. to have a good time, have a good space, and I'm always here, and to the next video.